The main objective of financing in a public-private project like this one is always to demonstrate to our clients that using the private sector for financing is a better deal than using public funding. And so there are two sides to the equation. There is the senior debt, and there's the equity side of it. So as far as the lenders are concerned, it's always about getting the longest term possible, the cheaper terms, as well as an accommodation of the structure that has been put on the table by the public authorities, so the contractual framework, basically. So on that front, I think the objective was achieved. We put the bid on 31st of August last year. We had a very competitive pricing. In the meantime, the credit conditions deteriorated a bit with Oman rating being downgraded, with the conditions in the wholesale US dollar market also becoming a bit more tense, so putting the bank group under pressure. But it was eventually delivered. So on the equity side of the financing, that's a sizable equity bridge loan that was raised on the back of ACWA Power and Mitsui's balance sheet, about $550 million altogether. I think it's fair to say that it's one of the largest raised in this region. And that was done with a number of banks that were also senior lenders. And that was on a very competitive terms. So that was an essential component to the cheapness of this financing. The strong support came from the fact that we worked with a large group of banks, but all of which had an extensive experience in Oman and this sort of contractual structures. The Omani procurer is very smart and always trying to push the envelope in terms of the risk allocation between the public authorities and the project. And this time was pretty much the same structure as the previous deal, but because it was bigger and there was a larger number of banks, and some of the banks were not familiar with the structure that had been implemented last year in the Salalah 2 IPP project, it took a little bit of convincing to get them on board. But the precedent that we had set certainly helped. So it just entrenched, I would say, further this risk allocation that was set by the Omani government, and made a bigger group of investors participate in the project with that type of risk allocation. So it was packaged and presented like a typical Omani power project in Oman, with arm's length contracts with the contractors, the operator, the procurer, the gas supplier, the landowner. And by and large, the features were familiar to the investors, so we didn't have to reinvent the wheel. There were, however, a few challenges with regard to the sort of construction liabilities that the project was taking on that required a lot of analysis during the due diligence process. The natural gas supply agreement is also a quite aggressive one that was tested in Salalah 2, but that required to be further explained to convince the banks that weren't there in that previous deal.
This is the Ibri and Sohar IPPs was the single largest procurement of power projects in Oman. This is second to the Quraya IPP, which was done in Saudi Arabia, which is around 4,000 megawatt. This was involved raising over $1.3 billion of project financing through a mix of local bank, Japanese banks, French banks, and international banks. This obviously come on the back of an established framework on the Omani IWPP and IPP sector. There are certain synergies and efficiencies which comes about when you're setting up two projects at the same time by the same sponsors and by the same banks. However, from a bankability and a structure point of view, we had to analyze and evaluate as these two separate independent entities with two separate project companies, The structure had to be evolved in a way that there is no cross-collateralization between these two projects. There are no cross-defaults within the financing loan documentation on these projects. So from a bank's point of view, along with their consultants and the support of the sponsors, we had to ensure that each and every aspect of these two projects are evaluated on its own and within its own merit. Now, that could be a technical due diligence matter or insurance or environment. Two projects have different completion timelines. One project has an early power element to it, the other one doesn't. Certain financing structures which are embedded into the financing have a different kind of impact on cash flows for one project versus the other. So all of these various factors had to be combined together to make sure that effectively it's a bankable deal with two separate entities which each of the banks can take it through their credit and have a successful closure of the financing. These two power projects are vital to the development of the Oman economy, considering the dire energy requirement in the country. These financings were done at the time of protracted period of low oil prices, impacting the balance of payments and the economy of most oil-producing nations, which also includes Oman. Successful closing of the financing shows the continued support the international institutions, both from a bank's point of view and the sponsors, showed in the Oman economy and the sector. These two projects were able to deliver a competitive tariff, providing cheap and reliable source of electricity to the country through various means, be it financial structuring, incorporation of certain balloon structures or cash sweeps, or through ensuring there's a competitive EPC price. All in all, it's actually, from an Oman point of view and a region point of view, having two of the largest projects being closed at challenging times shows the confidence the international community has in the region, making sure the critical infrastructure projects continues to be banked and financed.
This project comes at a time, especially the closing, is when there's the current economic climate. It shows that specifically in Oman is a well-trusted market for the private sector and for the IPP market in particular. It shows the maturity of the market there, and the commercial lenders and the developers' willingness to be able to close a project of that magnitude. I mean, coming in the region, it is the largest project that has been tendered on a conventional basis. There have been other projects, but these were later upgraded. But as a single tender, it is the largest. And having been spread over two different sites, it represented a bigger challenge. So if anything, I think it shows the market's confidence in Oman in terms of providing, involving the private sector in the power production. And it also gives, I think, the wider region a good emphasis that the IPP and the private-public partnership is a good model to perceive. I think it shows as well how other markets, that these critical infrastructure projects, despite whatever economic climates, are still required and still need a huge involvement from the private sector to be successful.